Let's keep it here. Who else would it be? This is just a simple YouTube video. We're gonna just do like Bitcoin review. I haven't done a video in quite a while, so I kind of want to get the algorithm put into place to kind of let it know that hey, I'm posting again. I'm gonna be posting much more. Try to do at least two videos a week, probably three, and we'll probably have some more themes. But for right now, just gonna do some analysis here, looking at Bitcoin. We had to get a good push up here. There was a lot of concerns with all the Middle East stuff going on over the past week, with oil prices going up, AI and things like that. And I've said this before. This is gonna be the most boring um deflection. It's not a deflection. This is a true analysis, but the my personal analysis is kind of a deflection. I don't really care necessarily. I mean, I do care what goes on, but as far as the analysis goes, it doesn't matter. And I've been vocal. That's not the answer that you're looking for, but this is the answer that I almost always go with because this is the answer that tends to be the most proper one when it comes to practical analysis. Okay. Um, there is a big misunderstanding, in my opinion. People want to look at news to see how it'll affect the market. I see this all the time. I go on Twitter, I go somewhere online, and it's just like, well, what caused Bitcoin to go 1%, 3%, 10%? Or what caused something to do this? Now, there are some things that will cause the markets to do certain things. Oil is one of them, and I've discussed this before. There are plenty of assets that will do that. Oil obviously is the big one, and that's because oil is directly tied to conflicts, right? Um, the dollar is also, um, attributed in some way like DXY. Okay, so there are some aspects to where you can take that, or you can take it with a grain of salt. But when you're looking at things through different filters and more filters and more filters, the correlation becomes less and less. It becomes more of a speculation, and also when there's different tickers, there's different exchanges, there's different ways to look online. Most people don't even look at charts necessarily anymore. I think the average person that trades doesn't even really look at charts, at least in detail. And so that plays its part, right? And so I've mentioned this before also with stocks correlation. People want to look at, well, what's the dollar doing with the stocks and how stocks is correlated to Bitcoin, how Bitcoin is correlated to Ethereum, and how Ethereum is correlated to, hype or something like that. So it's like you got to look at like five different things. It's too much homework. And sometimes some simple analysis will help out. So that pertains to my current thoughts because well, what does that mean for Bitcoin? A lot of I say that because a lot of people thought Bitcoin was going to drop here in the past 24 hours, and it didn't. It went up about 4 or 5%. We'll take a look at this here. A lot of people thought because of oil going up that Bitcoin would go down. It actually went up about 4%. It actually went up as high as about 5.7%, and it's still up about 3.8 here total, with about 15 minutes to go. And so this is your marker here. I do want to go back to the weekly. However, there's a few things I want to look at here. You have this is your previous range here. This was your range high here at about 71.5 and 54.5 down here. That is also contextual to this layer right here. This is your swing, what I call swing high order block, where you take the bottom of the second, or the top of the second highest marker and the top of the highest marker, and then you just push it over to the end. It creates some sort of liquidity based support, and you can see we're right underneath, or we're right above it, I should say. And so these two markers here give us a certain either support or an illusion of support. That's kind of what I'm looking at here. And we had a pretty good reaction so far. We had a good push last week. This rejected completely. Almost flipped bearish. Um, but it didn't. And actually have a pretty good week this week so far. Now, I was talking with somebody today on Twitter that this is the weekly open. Okay, we're still less than 24 hours, barely. We're hitting that 24-hour marker here on the first day of the week, and we've already ripped bullish. We've ripped up. We don't have a wick down below. Usually we wick to one side or the other most of the time. Okay, the last time we did not was right here in January of 19 or 19th 2026. So January of this year. We pretty much did it all the way. I apologize if I may have missed one. You might have a little one here, but most of the time we do wick on both sides. Almost always. Here's one here that did not, and usually when it doesn't, it does come back anyway. So that's what I'm looking at. So roughly speaking, we only tend to get about two or three candles per year that don't wick to both sides. Now, is this going to be one of those instances? Possibly. It is possible, but right now, that's not something I trade. Right, that's not something I'm going to look into. Now, I have bought some long term spot. I think I've bought more than I have since we've dropped. Okay, because I'll buy some every month. I buy some every month, just a little bit. And I've bought more in the past, 2 weeks than I have pretty much for the last 12 months. And so now that doesn't mean that does that mean that I think it's going to go up? Not necessarily. I'm prepared. If it does go down, I plan to triple that amount and even quadruple that amount possibly. So you have to play that into perspective. Now, the good news is we have the bounce here. I think the key thing I want to look at is two things. One, I'm going to look at the daily here, and then I'm going to look at kind of like my overarching like high time frame thoughts. We had the consolidation here, deviation or push up, I should say. So we had the breakout. Then we dropped down to get that deviation that I'm looking at. And so usually that means that we're going to head lower. When we get a deviation from the upside and reject here, we tend to sharply go down pretty sharply. In fact, if you're in my Telegram, if you're not, you should join. But if you're not, I posted a short that would go down to about 60,000, I think. And then we almost got there. Then we kind of bounced back up recently. I still think that we're going to go down here pretty soon. Now we'll see how that goes. However, I do think one of the reasons we're not performing pretty well on usually we accelerate downward. The one reason I don't think that we are is because we're looking at this big range here in the blue here, and then also this solid gray area or semi-solid gray, I should say. We need to break that. The alternative would be we have to break 71,500 to get above that. And if we do, we have this to continue. This is going to be a major level that we look at. It's not necessarily a big buy opportunity as far as like, I don't think it's going to give us too big of a threat, but this is a significant jump that we need to go through. Okay. And even if we do, I think here is going to be another range here. Because you got this block here, okay, and then um you got this block also. And so I know that I'm not trying to cherry pick that, but you have three levels you have to work with. And we went down both. Not only did we go down both of those, but we also tested this. And that's something to consider. If you get rid of this block here, this was actually a range bound of this and this. Okay. And so if I look at it differently, take the bottom of this, um, go here, take the bottom of this, and then the roughly the top of this, and that's kind of where you have the zone. So that's why we stuck there because we weren't sure if we were going to break this, and we didn't. And also too, if you take the midline of this, you actually hit the wick, right? And if you take the midline of this, um, you hit roughly in the wick zone of this area. See what I'm saying? So this is more contextual. This was a range bound of the gap of these two range zones, and that's why we didn't break either one. We dropped down. And so that's also, again, I say a lot here, but that's why I think that this is not going to be an easy path up. I think it's going to continue to zigzag, and then just one sneeze and we come back crashing down. That's why I actually think that we're going to go back down instead. And this is one reason why we're having a lot of hesitancy. We're going up and down, up and down. A lot of wicks here because there's a lot of liquidity decisions that need to be made. So I think we're going to go back down. I think we could get one more jump up to the upside here because that wick was pretty strong right here. But I think that's just a sign that we're not ready. We could retest that again. If we get above that 71.5, I think we're probably in the clear. But until then, I think we're going to drop down. Now, as far as that goes, the second thing is what are my overall predictions? Not, I don't like the word predictions, like overall thoughts about targets. And I honestly am looking at roughly this area right here in the lows. And there I do have some reasons why, but I want to take this section right here and kind of look at this like so. Actually, I want to just get rid of all this here, just for clarity. This zone like so is kind of where I'm looking at, and so I actually think um, this zone is probably where we're going to go. Okay, I think we'll get a drop here. I think it could be, it could take some time. It could take a couple months. But the reason I like this is one, this is the mid range of this previous zone. Actually, it's take this top, this bottom here. That's also very similar, like 80, 48. This is probably a better idea of what I'm looking at here. And this is also a wick from this low. So it'd be testing the lows here and so it's testing the lows of this zone, testing the mid of the previous zone. So you have a lot of coverage here. Now, do I think it's going to follow that? Not necessarily. That's why I have a gap range. Like that's why I'm looking at the top here is like 53, 54 really. So anywhere between 54 to like 48 on the low side. And so I could even just put it down there. I don't have a major dollar conviction on this, just more of a range because I know one, not to behave that way. Two, it's going to be more pattern based. You're going to get probably a wedge of some sort or some sort of oversold V shape, whatever. That's what I'm looking at. I've learned over time to not look at target prices, but to look at target patterns. Okay. And so that's what I'm looking for. If I get a weekly or 2 week or 3 week divergence, I'm buying all in. Pretty much all of my capital will be that I can dispose of will go into that, and so this is kind of where I'm looking at for the downside. Now, what would convince me to say, all right, the bear market is over? Quite a bit actually, because I think even if we go to all time highs, there's a chance that we wouldn't. But I think that would probably convince me would be a really decrease that odds would be above here. If we can get above to like 94,000, I think that would increase the odds that the bear market's over significantly, pretty significantly. I think if it goes above this above here to 104, I think it would increase probably to like 80%. Um, it would just depend on how the high time frame looks. If we get another divergence, then I'm going to be out again, and so we'll see how that goes. But I think we're too far into this to really otherwise think so. About we're down about 44%. So um, I still think we have some time to go. We've dropped this low before and we've reclaimed this because I believe this was like 48. I need to change this here. That was like 47, so pretty close. I need to change the colors on this, so I apologize. But and then we bounced up, but the problem is once we bounced up, this was still over. Honestly, like you could have sold here at 59,000 and still would have been perfectly fine. See what I'm saying? So I'm not concerned because we could technically go up to like 130, 130,000, 140,000 and then come back down for 2 more years. And that would kick that in as well. So that's something to look at. Now, where are we at? Some people think that we are here. Some people like me think that we're here. And so we'll see how that goes. But anyway, just an analysis for you. I hope you enjoyed this, but let me know what you think. And honestly, for the YouTube, like, subscribe, especially share it or whatever you want to do. If you don't want to, that's fine too. Let me know what you think, though. I'll see you next time.